Stock, crypto, and options trading has large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose, and this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Welcome to Snipers Live Trading, everybody. It's Monday morning, 9 a.m. sharp. Let's dive right in and see what's going on in the markets this morning. The debt ceiling talks is really in the cards. That's the thing that the markets are mostly spooked about. Our government is trying to figure this out. We'll see what happens. He looks happy. Maybe it's okay. He's not looking so happy. I don't know. We'll see what happens with the debt ceiling talks. I'm sure it'll come to a good conclusion, let's call it that. Other than that, there's just not a whole lot of stuff going on in the news this morning. We'll go into CNBC as well and see what's up here. I don't like their new format. It only shows one thing on the screen at once. I liked it better when it was all smaller. Dow futures rise a little bit on debt ceiling hopes, not that much though, pretty much flat at the moment, up 0.18% on the Dow. It's just sub 1. Oil is up a little bit this morning. We'll look at all that in a minute, but really not a whole lot going on in the markets. If we look at the economic calendar for the week, we have really not a lot going on this week either. We got retail sales coming out tomorrow. Retail sales will be interesting to see if there's any indication that we as consumers are buying less stuff, which is getting less expensive. Inflation is coming down a bit as of the reports from the last couple of weeks, CPI, PPI, jobless claims, all moving in the right direction from a Fed perspective. And lots of Fed presidents speaking this week. Housing starts on Wednesday. Keep an eye on the housing market. Interest rates are higher. So mortgage rates are also higher. That should curb demand for houses, buying new houses, or any house for that matter. And let's keep an eye on that for Wednesday. We might go after the housing market next week or later in the week. And then we've got jobless claims, 8:30 on Thursday. That's a big report. The last report we got, the jobless claims increased, which sounds counterintuitive, but that's good for inflation. We need more joblessness in order for inflation to abate. Existing home sales are also coming out on Thursday as well. So Thursday is a home day as well as Wednesday, and then jobless claims, and then Fed Chairman Powell will be on a panel on Friday at 11 a.m. Mark your calendars. That'll be fun to watch. All right, that's about it for the week. Earnings is we still got some earnings this week. Earnings is winding down. We are in the second week in May, and earnings are still aplenty. If you want to see the earnings, a number of earnings for the week, I like to check this out every now and then. If you go to finance.yahoo.com earnings calendar, you can see here, if my internet cooperates a bit here, we got quite a few earnings coming out today. 756, but this is not as much as it was last week. Last week there was a whole boatload of earnings, and now earnings are starting to wind down. All right, that's how many there were last week. Look at those numbers there. And now earnings is cooling off. There's still a lot today, but they'll really start tapering off. Now, as credit spread traders, which is primarily what we do here in Snipers, that to me is a good thing. Selling credit spreads into earnings is not a good idea. And with these behind us, for the bulk of earnings behind us now, we can swing away more with credit spreads. Let's take a look at our portfolio. I continue, and I don't want to sound, negative, but not negative, but I continue to be amazed at our performance in our credit spreads. We had 3 credit spreads on, including a longer term UNG credit spread. We had one on Capital One. That was a winner. Let's take a quick look at that one, see how that one ended up. And, the slippage on this was hard to discern. We got in for 15 cents. This was a 7-day trade. and we nailed 17% on this bad boy in a week. And we got in here. Remember, we got in the morning when the stock had bounced on some good news for banks. And we came in, we sniped some profits in the first part of the day. And by the end of the day, when we got in, let's go to the day we got in on 5/8. I love these sniper candidates. In fact, if any of you are looking at any trades at all right now, please put them in the chat box and we can take a look at some pre-market snipes. I don't see any pre-market movers at the moment. If any of you see any, please type them in the chat box. So this is the trade we placed in the morning, and it was just a credit spread, selling an 84, buying an 83. And then by the end of the day, having sold the credit spread for 15 cents, 55, 40, 15 cents a credit, we were already up 6% by the end of the day. That's the kind of thing that's available in the first 15 minutes of the market. So we can find stocks that are moving big right at the start, right at the open. We can come in and grab profits like this. We've been doing this pretty routinely, and it's just a really beautiful way to grab some high probability profits. So this one expired for 17.65%. Let that one expire. And then we had PACW, similar story on PACW, exactly the same story, in fact. And it's the same trade as Capital One. We did another one. This one netted us 11% in 5 trading days, which is pretty awesome. We have had a TLT Iron Condor, and that one on May the 5th, which was when it expired right in the backyard. All right, so that's Iron Condors. I don't count the Iron Condors in the credit spread performance, which I'll show you in a minute. Here's the UNG, the longer term short put spread on a bottoming commodity that isn't going to zero. Natural gas isn't going to zero. We placed this trade on about 1 month ago on April the 14th, longer term credit spread. We sold this credit spread 550 for 10 cents. Currently, we're up to 8 cents of profit. So we've got 2 more cents to make. The slippage here is a little wide here. Theta is working for us. Nothing really to do here. Our plan on this one was, in the event the stock tanked, we could consider taking this stock for $5.90, your cost basis when you consider the credit, and write it out and sell calls against the stock if we ended up taking the stock. This one's looks really good for expiring. Worthless. Put an order on to buy this back for a penny. Now, I don't think a penny's available just yet because of that slippage right there. That's end of day slippage, both of these. You know, that's what, 100% wide there, and whatever that is, 700% wide or 600% wide. So massive slippage at the close on this instrument. Nothing to do yet. Only 14 days left. That one looks destined for profit. In fact, the statistical probability of profit is 86.9% over the next 14 days. So we're killing it on our credit spreads. This is the performance on just the short-term credit spreads. And this is what mystifies me, because I've never seen this before. I've been doing credit spreads for 25 years, and I've never done 26 credit spreads with 25 winners and only 1 loser. Just 1. That's a 96% win rate, and an average profit per trade with this 1 loser, $215 loser considered, we're still making 13.28% on average every 6 days. Multiply that by 4, reasonably, that's what you could do with a piece of money that you want to put at credit spreads. You could literally keep that working week by week, and have a good shot at generating, what's that, 52% if these numbers hold up in a live account going forward. That dog will hunt, as they say here in Texas. And then lastly, this is the performance of snipers from the very beginning. Every trade we've done, and these include different types of trades, condors, long-term credit spreads, and we're still up around 10% on average every 21 days. Now this is credit spreads, short-term credit spreads plus longer-term credit spreads plus iron condors. And with all of that mixed in, 10% every 21 days with an 89% win rate. Phenomenal, 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 phenomenal. So let's keep it going. Let me stop sharing for a sec here. Is there anything else? Let me stop sharing and take a look at everybody. Good morning. Hi. Good evening, James. Good to see you all. I don't know if you can tell where I am. I'm in Houston, Texas. I'm gonna see if I can get to an Astros game tonight. I don't think did Gerardo ever make it in? I don't see him. All right, something's up with his computer. Anyway, well, if anybody has, there he is. Hey, Gerardo.
Hello, good morning.
Good morning. How you doing?
I'm good.
Feeling a little bit stressed?
Yeah. It's Monday morning. My computer has some kind of flu.
All right, I'm going to go to the Apple store today and get you a real computer. All right. All right, everybody. Well, let's get in. I have a little presentation for you, but does anybody have stocks they're looking at? I'm going to take a quick look. Well, actually, before we do that, sorry, I've lost the plot. Let's take a look at the markets. How about that? So I'm going to go through the futures. You see, you know the future symbols by now. Let's just go through the basic four corners. Here's the S&P 500 /ES, and look at this resistance level. It is just so clear. 4,200 right up here at resistance. The markets are going nowhere at the moment. They don't know where to go. And that's the case across the board. We got, we're up a little bit today, zooming in just a tad bit. We're up a little bit today, but man, that's nothing. Nothing's going on. Let's take a look at the Dow /YM. Same story. We got some resistance at 34,000, 34,500. But, channeling sideways, choppy sideways, strong. Well, we got some support at the 50-day average, 200. Well, this thing's not going anywhere. Let's take a look at the NASDAQ /NQ. The NASDAQ's been more bullish than the rest of the indices, and that still is the case. You can see here, let's zoom into this point here. It looks to me, and you don't need me to tell you this, but it looks to me like we're heading back up here to about 13,800 or 750 or so, somewhere in here, right at this peak. We have broken above last week. We got 1, 2, 3, 4 closes above this resistance level here, now support. Tech stocks seem poised for further upside. So if you're looking for bullish opportunities, consider tech stocks. And then the Russell 2000 /YM, I'm sorry, RTY. What am I saying? I love this one. You know why I love it? Well, it's going sideways, but it's got a ceiling up here, a debt ceiling. And this ceiling at the 200-day average will keep this stock contained below that level. We've done 2 bearish IWM credit spreads and just nailed both of them. And I still think that's a good trade. I think selling credit spreads right up here, selling bearish call credit spreads right up here at the 200-day average, which on the IWM is 182, is a good move. Now, today, I'm going to show you another way to trade this that will make you more money than a credit spread, give you positive theta, and if you're wrong, you don't lose as much as you would on a credit spread or an iron condor. How does that sound? Did you hear what I said? Yeah, we're going to put on a trade that will make more money than a credit spread, and in the event we're wrong and the stock does start moving against us, we lose a whole lot less than a credit spread. All right, so stay tuned. Maybe throw in the chat box what you think that strategy might be. Be interested to see what all of you think I'm talking about at the moment. All right, what else do we have here? Let's take a look at gold /GC. Yeah, gold is flirting with multi-month highs. It's up a little bit today, but basically choppy and sideways. If you want to go bullish on gold, wait for it to break above I would say if it gets above 2085, which is the high of that, the multi-month high, then we might go bullish on gold. But gold is choppy and sideways. You flock of butterfly gold traders are probably enjoying this behavior here. Let's take a look at oil /CL. Light sweet crude oil futures. Yeah, sideways, choppy. Gold, oil is tough, man. Oil is, you just never know when OPEC's going to come out and constrict supply or loosen it up. And, you know, it's a very volatile instrument, especially lately, just choppy sideways. Don't see much we can do with that at the moment. And natural gas, we're interested in this one because we have a trade on natural gas and it is, yeah, it's going sideways. Nice little opportunity for a sideways trade on UNG or natural gas. We do have a bullish credit spread on natural gas, as I just showed you. Let's take a look at bonds. Choppy sideways. Maybe another opportunity for us to trade the TLT, which matches up with 30-year treasury bonds quite well. So nice choppy sideways pattern on bonds. And that's what the market is doing. Sideways, lots and lots of sideways opportunities. All right, now, I think that's all I wanted to cover. Anything I'm missing? Bitcoin, let's check out Bitcoin. Yeah, I don't know where Bitcoin's going. Who does? 2,600 support, 26,000 support, I should say, 31,000 resistance. Choppy sideways, similar to the rest of the other instruments that we have looked at. Let's check our chat box here. I'm hearing some of you saying calendars. Yeah, it's calendar spreads. It's calendar spreads. And before I get into calendars, let's just take a look and see. I'm going to go to lovers and losers and pre-market movers. Now, one thing I don't really like about this watch list is, at least on my account, pre-market movers doesn't give me any pricing. So I like to see pre-market movers, and I haven't seen any news this morning about stocks that are moving. I do know we have Home Depot and Lowe's earnings coming out, I think, in the next day or two. Here's Apple. Let's just pull up some stock charts here. Apple, I like Apple a lot. Apple's is bouncing up against 175 resistance. All right, so keep an eye on Apple. If Apple breaches 175, that's a multi-month, maybe multi-year high, and that would be a signal to consider going bullish on Apple up to 180. Don't really see it happening. Airbnb. Oh, yeah. This is a little more interesting. Let's see. So Airbnb came out, bad earnings. Let's check out what's up here. Let's see what we got for today. The news that have come out, KeyBank maintains overweight on Airbnb. So that could pop the stock this morning. Currently, it's right about where it closed on Friday. This is analysts. Don't see a lot of, I want doom and gloom. If I'd seen a downgrade on Airbnb, I'd come in right now and get ready for selling a bear call spread. What you really want, if you want to get this snipers, find stocks that have before market had some bad news or really good news, really bad news, really good news. Stock is opening, gapping up or gapping down to open the day. That's when we want to come in and snipe. Now, unfortunately, I haven't seen any news, and I'd have to go through this list, and I'm going to let some of you do that. If you see anything today that looks like it might be a good sniper credit spread candidate, please let us know in the chat box. And Gerardo, if you wouldn't mind watching that for me, and if you see anything, let me know. Look at SRPT, Daryl, SRPT, FDA News, SRPT. Let's check that out. Thanks, Daryl. SRPT. Let's take a look here. Oh, okay. It closed Friday at 120. And this morning, pre-market, it's up to 150. The stock's up here as we speak. As I speak, the stock has gapped up. Let's find out why. And Daryl, if you have any news to save me some time, let me know. Hey, go ahead. Was that you, Daryl? I thought I heard somebody. All right, let's see. Stock soared 20 pre-market after FDA panel narrowly backs accelerated approval of DMD therapy. Oh, okay. So that's good for one of their drugs, obviously. So the FDA's come out and given a nod to this company's drug. We can dig in and try to figure out what that is exactly, and it's in here. Now I'm going to let you all do that. I'm not too worried about what the drug is. I think the news with the stock up at 150 is enough. So the next step is to look at the stock chart here. Now I don't know what the slippage is going to be on these options, how liquid they are. We'll look in a minute. But if the stock's up at 150, then I'm looking at support levels underneath. So the idea here would be in the next 9 minutes when the market opens, this is good news. So there's going to be a lot of option orders that are going to flood the market. The IV will be elevated, and we could possibly, as we've done a handful of times, most recently even, grab some extra premium in the morning as there's this feeding frenzy at 9:30 Eastern time. So if the stock's up at 150, 150.7, let's say call it 150.60, so just above 150 is where it will open. Where do we want to sell? Well, then you look at support levels. So 145 would be at the absolute closest I would get, and probably not. I don't know if this is going to hold above 145 by the close. And then, 145 is support over here. So that would be the closest I'd want to get, but I would rather get down here to 135. I'd rather sell at 135. All right, that's right at another strong support level. We also have 140 and 145 above. Stocks at 150, it would have to drop below 145, one support level, drop below 140, two support levels, and then all the way to the 50 and the 135 level, which ends up being 5 support levels. So that would be where I'd want to sell. And then, so 135, let's go into the option chain and let's see what options we have available here. This could be a 4-day trade. Let's take a look at 135 on the puts. The slip, I'm just looking at slippage here. The slippage is very wide as of Friday's close. That's almost $4 wide on a $28 option. Now that's not going to be worth that when the stock opens at 150. So we'll have to see. The slippage looks a little bit gnarly. Now let's go ahead and just play with this. I'll have this ready to go. I want to sell the 135. And then I want to buy, actually, let's do this. This is an easier way to see it. I'll set up vertical here. So this is another way to look at the option chain. Looking at 135, the slippage is gargantuan. It's saying we can get 70 cents. Now I'll tell you, if I could get 70 cents on a 1-point spread, my risk would be 30. What? Yeah, my risk would be 30 cents. $70 credit per contract, $30 of risk per contract. And that's a gargantuan return on investment. So this is the guy that goes to a casino and he makes a few $100s on the tables, and he's walking out the door and he looks at the roulette table. This is where they put it, right by the door. And I'm attracted to grabbing this kind of credit. Now, it's not really responsible to trade that way, but it's interesting to me. I think what I want to do here is, let's see, if we did 10 contracts, I don't know what we're going to get. I'm going to put a line in the water and see what happens. If you give me 70 cents on this thing, I don't care about this wide slippage. I've got 30 cents of risk. I'll take that all day long, man. So that would be $300 if I did 10 contracts Well, it's $30 per contract. 10 contracts would be $300. So maybe you don't like putting $300 at risk. Maybe you say, well, I only want to put $150 at risk. All right, so 5 times 30 is $150. So you'll make 350 or lose 150. And again, I don't think we're going to see the stock down here at 135 anyway. So go ahead. I'll take the slippage. I'm going to let it expire anyway, most likely. So I'm in. I'm going to go for it. You know, keep your risk contained though. Things can happen. But man, think about it. The stock's got this FDA nod. Stock's way up here. Is it coming down to 135 by Friday? Nope, I don't think so. We've got 4 minutes. Let's just throw a line in the water at 70 cents. And let me copy. We got plenty of time here. We got what's still 4 minutes. So let me copy this and I'll stick this. All right, now listen, this is aggressive. I like trading like this a little bit. This is how I used to trade solely before. So let's just play with it. Let's just play with it. Paper trade it. Or maybe wait until the open and then see what the slippage looks like and then get in. But if we could get 70, I'll take it. So I've just posted that in the WhatsApp live feed for snipers. This is available to our subscribers who have subscribed to other products besides snipers, as you probably know by now. So let's go ahead and jam this in for 70 cents, 5 contracts, selling the 135, buying the 134, confirm and send. We've got our line in the water, and in about 3 minutes, we'll see what actually happens. Daryl, what do you think, man? Is this your kind of trade? Okay, Andrew says E-Trade won't take the trade because the slippage is too big. Yeah. Dave just said SRPT has a new drug that treats Duchenne's muscular dystrophy, FDA approved. That's fantastic. That's really good news. I'm glad to hear that. All right, well, Thinkorswim took it. Let's see what we can get. We've got 3 minutes. And I'm going to just check news real quick. Sometimes CNBC will pop up trades. Let's see. I want to wait until the open before I get into the calendar spreads. I want to cover it with you. There's actually another scanner that finds sideways patterns better than Channel Finder. That's really the focus. And then we're going to do a calendar spread today as well. We haven't done one of those yet, and we're about to this morning, I think. If it's still there when we run the scan, it will be there. I know it'll be there. What else we have here? It's not much going on really today. Not much going on really today at all. Let's take a look at some of these other stocks. So what about Meta? This is another good idea for a sideways trade. Meta has gapped up and has gone sideways to flat right around 240. Earnings is behind us. Home Depot, I want to see Home Depot. Earnings on Home Depot is tomorrow. So be ready there. Post earnings could be a good sniper candidate. I think Lowe's is coming out tomorrow as well. No, that's already happened. Walmart's coming out on the 18th, which is Thursday. Walmart comes out with earnings. Strong resistance right up here at 155. All right, the market will open here in about 30 seconds. Let's see what happens with our trade. SRPT. Wow, that's amazing. Very volatile stock. So you got to be careful. Keep your risk contained. We've got about 15 seconds. Let's see what happens to our trade. Make sure our trade's in the hopper. There it is. Selling 5, 135s, buying 5, 134s, 70-cent credit. Is anybody else having trouble getting it in? Boom, we're off. Let's go to charts. Now remember, some of these, there's SRPT right up here at 150. Let's go to monitor. The options market may not be quite open. What? Shows $2 there. Huh. Let's go back to trade here and look at the option chain. Go back to single. I want to see the individual slippages. Let's take this down
Mike,
to
is that an in the money put? Am I awake this morning?
no, it's out of the money. Yeah. The put strike is
35?
yeah. Yeah. It's we're at 135. If you want to, if you're still not quite clear about in the money, out of the money, there's a video that Gerardo and I did. You can watch that. But in Thinkorswim, all the options that are in the money are shaded purple. All right, for puts, if the strike is less than the stock price, then that's out of the money. All right, so the 135 put is very, very far out of the money. And you can see here, they've got the bid at 0 on these and the ask at 5. So that slippage is gargantuan. We may
I see it.
What?
I
What's
see
that?
it. I see
Okay,
it.
good. Okay, good. 0 by 5, we're probably not gonna get filled. They'll have to pull off today. Now it's down to 5 cents. So that one is not gonna happen, but we can keep an eye on it this morning and see. So for 5 cents though, 5 cents, 95 cents, about a 5%, just over a 5% return by the end of the week. So that's not bad. Let's cancel replace and go for 10 cents. See if it'll give us 10 cents. So think of this. So here's how you figure out return, right? You got a dollar spread. We're going to sell the spread for 10 cents. And therefore the max risk is $1 minus 10 cents, which is 90 cents. So if you can make 10 while risking 90, that's what, an 11% return by Friday. I'll take that. Let's go for 10 cents. Is that right? 10, yeah, just over 10, about 11%. So it's now at 7.5 cents. Let's just fish. We may not get it. I'll let that sit there for the balance. And then let's go to the topic of discussion today. And that's profiting on stocks in a tight channel. We've talked about Channel Finder. We've talked about Channel Finder, but there's a better scanner for sideways, and it's called gyrating stocks. So what's a gyrating stock? Well, it's a lot like a hula dancer, where the stock is moving fast and crossing the center line more often. So here's a current chart on the IWM, and stocks that gyrate. What's gyrate mean? It means it's going up and down, crossing above and below a midline many times. And look at IWM. So the more this is the middle line. That's the middle part of the trend, the median part of the trend. And look at how many times the IWM has crossed above and below and above and below and above and below and above and below. It's gyrating around this center channel. And the more stocks do that, the more likely they are to stay in the channel. And so that's really what this is about. And there is a nice little scanner that I want to show you here. But before I show it to you, I want to take you through a multi-part scanning, like washing the data such that we can find the very best gyrating stock candidates for trades like calendar spreads and even iron condors. So we're going to use something called filter list slippage. All right. Now this is good for calendars because we're buying and selling options at different expiration dates, and slippage can be a problem. So we want to make sure we have really tight slippage. I'll show you how to build the tight slippage list. And then we're going to feed that list through Gyration Finder and find stocks that are gyrating across that center line more than others. And we're going to find really good candidates. So the first thing we're going to do is go into something called filter list. These are scanners in Tom's tools, as you know. And what we'll do when we come into the scanner is we're going to say we want narrow bid-ask slippage. All right. And what we're going to do, not take 1%, we'll change the average slippage number to 0.5%. Now, what's important to note is that the calculation for slippage in this scanner is not based on the actual slippage between the bid and the ask. It's actually the slippage that says if the stock moves 1% or 0.5%, then that stock movement will cover the slippage. So it's another way to calculate it. And I don't really prefer this method, but it's what the scanner does. So in order to get tighter slippage than 1%, which is kind of wide sometimes, we're going to drop this option bid-ask spread average down to 0.5%. And then pick your list, penny plus weekly. You can even do all optionable stocks. Then you click search, and then you save that list by clicking replace my stock list into a temporary holding list. And then we'll take those tightest slippage stocks, and then they'll run them through the gyration finder. We'll select inside parallel channel, and then we'll hit search. And then we'll take those results and save them in my stock list. And then we'll have tight slippage gyrating stocks. And then we can take that list and go looking for calendar spreads, which I talked about 2 weeks ago. So there is a sniper education session about calendars. If you're new to them, you can watch that. I'll review again, of course, here this morning. So let's go take a look. So now I'm curious. Wow, that slippage, that spread's not going to happen. Doesn't look like. We may take another look at it. Keep working it if you're interested. Okay, let's go into the scanners. First off, make sure we got today's date. No, that's Friday's date. That's okay. Let's go to website, lists, filter lists, select 1% bid ask. That's too high. So let's change the max to 0.5. And let's go after penny plus, which are already pretty tight, but we're going to get tighter than the tight. Hit search. And then at the result of this will be out of the penny plus weekly stock list, the 56 that have the tightest slippage out of 663 stocks. So we could save this in my stock list, but you may even want to create a new list called, let me see if there's any here I want to get rid of. I don't see any I want to get rid of. Yeah, we'll do this one. You could even say, all right, I want to save this list as tight penny plus. And then you can have that list for other things. So this is a nice little target list of really the best slippage stocks. And you can look through this list here, you'll see some names you really recognize, the big names: Citigroup, Coca-Cola, Cat, Oracle, JP Morgan, MasterCard, Home Depot, McDonald's. IWM's in here as well, I believe, right? Let's see. Yep, there's the IWM. We also have the SPY, the SPX, and the SPYs and the Qs and gold. This is a really good list. So let's go ahead and create a tight penny plus list. All right, so that's saved. Now we have 56 stocks in this list. And now what I want to do is go into the gyration finder, stocks, stock analysis, gyrations. You don't have to worry about any of these settings over here. This gyration finder can do a lot of different things. It can look for an outside parallel channel where the stock is very volatile, inside closing channel like a pennant. You can look for outside. I mean, there's so many different scanners here. We're just going to go inside parallel. And as is always the case in Tom's Tools, if you click help, you can get help on this scanner, and it will take you through each of the wizard settings as well as the output from the scanner. So feel free to play around with it. I want sideways though. That's what I'm interested in because the markets are going sideways. Let's find the stocks that are going the most sideways in a sideways market. So next, I want to select my list. Let me find it. Penny plus. This is the hardest part. Where is it? There it is, tight penny plus. And then I hit search. It was only 18. That's fine. That's all I want. Look at some of these stocks here. We can look at the picks here. You know what I like about Johnson & Johnson is the stock is living between the 200 and the 50. So that's a nice little 2 walls fence line around the stock to keep it gyrating. Here's the IWM. I tell you, I like this one. And this is the one I want to do because of this beautiful choppy sideways channel, lots of crossing, strong resistance up here. That's going to be a good one, but all of them are moving sideways. And you can see the number of times that the stock has crossed above or below the center line. So IWM has crossed 6 above the bullish and then 4 below the bear. So all of that, the more crosses, the better. That's the point, I suppose. So these top ones are the best, but let's go ahead and save these 18 in my stock list. There it is. I'm going to hit replace. Okay, now what do I do with this list? Well, you can go to searchers, single strategy, and the strategies that make sense, the most sense, are condors and calendars. So let's go after calendars to start with. And similar to a lot of these scanners, there's a whole boatload of different types of scanners that you can do, different types of calendar spreads. I'm just going to go after the basic, at the money, put calendars, B2B. What that means is it's using consecutive months, consecutive expirations in order to construct the calendar. There's reasons for that. If you want to know about them, let me know. Let's go after my stock list and hit search. And let's see what we have. All right. So again, all of these are going sideways. Look at Walmart. Yeah, baby. Problem with Walmart, earnings. You do not. This is so critical in both iron condors and calendars, is you don't want to put on a calendar or a condor with earnings only 6 days away. The reason for that is IV rushes. And with a calendar spread, the IV will rush more in the short option than the long, and you can get crushed. So bottom line is, don't even think twice about taking on a calendar spread with earnings approaching. So all of these here are off the table for the moment, but we can look at them after earnings. So those could be good ones. You know, let's see this one here on Walmart, Home Depot, you know, next week or so, those will be good looking trades. So we'll keep an eye on those for maybe next week. Gold is on the list here. What you have in this scanner is going to give you the stock price, the strike price. And here we're selling the July options and buying the August options. These are puts. It's going to give us a potential 301% return on investment. Now, gold is a really liquid ETF. We could take a look at this calendar by clicking, I went too fast there, clicking the leg prices. And one more thing before I even go to the calendar. When you go through this list, you want to keep an eye on the strikes, which will be the same in both the long and the short, and make sure the strike price is close to the stock price. So sometimes that doesn't happen. You know, sometimes you'll get, like, let's see if I got it. Here's an example where we're using the 155 calendar and the stock's at 153. That's still pretty centered, but make sure your strike and your stock price are close to the same. And when that happens, then you get something that looks remarkably like that. Oh, you know what I forgot to do? I forgot to do something. Now that's a good calendar, but it was a long, let me pull it back up. Let me finish my thread. That was a longer term calendar, which is okay. You know, what we're doing here is we're selling a 70-day option and we're buying a 98-day option. And this risk graph is over the next 70 days. I'm not interested in expecting gold to stay in this range, although it's big range for the next 70 days. So if you want to do shorter term calendars, which is what I want to do, you go into the wizard criteria, and there's a lot of criteria here, but the two criteria I want you to focus on are these. All right. So days to expiration of the primary option, that's the short option, should be no longer than 30 days. And the days between option expirations should be no more than 30 days. All right. We might sell a 30-day option and then buy a we might buy a 30-day option, sell a 30-day option, and then buy a 45-day option, which would be a good calendar. So anyway, bottom line is on these two settings here, change the maximum to 30. And that will give us shorter term calendars. I'll hit search. And then we go through this whole list again. Now if I go find, now gold is further down, but this is the one I want to, we'll come back to gold perhaps. There's one down here on gold. We could look at that one, but with 15 minutes to go, let's go look at this one. This is the IWM. The stock's at 172 and the strike 175. Let's see if there's another one. Going down a bit further. Here's another one. Same strike, 175. This one is better. Let me show you all the IWMs. Actually, this one is the better one here. You see here, the 173 is the strike, and the stock is just shy of 173. This one's a little higher. So if I grab this one with 21 days to go, potential profit of is 181%. Let's take a look at it. Let me zoom in for you. Let's zoom in from 150 to 215. So you can see a bit better. 150 to 215. Risk graph. Oh yeah, baby. That is spectacular. What's really good about it is the break-evens of the calendar spread coincide with strong resistance up here and strong support down here. All right, if this stock starts breaking out to the upside, we have the 200-day moving average. Let's take you to a live chart of the IWM. So 181 is the 200-day average. We have 180 as well, which is also resistance. So even if IWM starts breaking, it'll hit this 200-day average and good chance it'll stall. And that's at 181. And on this risk graph, 181 is just a little bit higher than this upper break even is 179.37, which is right at 180. So if we go up to a little bit higher to 181, right about there, then this is the good news. And this is what I said earlier. One of the things that's really great about calendars is pound for pound, the risk management capabilities on calendars are built in to limit the amount of money you lose if you use the break evens as exits. Now, in this case, I would use 181. And even if the stock's at 181 today, then we're going to lose $20 on this trade out of $121, 15% loss. So, but if you get out of these break evens, you're going to manage your risk a whole lot better than a condor or a credit spread. On a credit spread, if this was a credit spread and we're making money below this line, then by the time the stock hits the break even, you're down, 20, 30, 40%. Here, 15% or so up here. Even this, where the green line crosses, is 180.33. So if it takes till May 30 for the stock to get up here, you're still making money below 180.33. So again, to the downside, similar. If we get out at the break even, we're going to manage our losses really well and a whole lot better than a credit spread. So this is a 28-day trade offering us a potential 180% return over the life of the short option. It's phenomenal. What's 6% a day? 6% a day. 6% a day. We're doing 6% a week, and we're taking that on some trades for high probability of profit. All right, so that's one I like. Let's go ahead and let me post this in the WhatsApp feed for snipers. I tell you what, I love calendar spreads. We just haven't done many of them. I haven't. And I want to incorporate them into the hedge fund fold as well. And those of you that like flocks, you could even consider having your center trade be a calendar and not a broken or a butterfly. You can consider that. You
Yeah,
can consider that too. Comment?
Yeah. So yeah, I played lately using calendar on the protection. I mean, if I expect it's going slightly down because of the IV, and I use the broken wing butterfly on the bullish side.
There
So
you
combine
go.
the calendar and the bullish broken wing butterfly.
Yeah, that's a good point, Peter. And the big difference between a calendar, there's a few differences, but one of the biggest ones is Vega. So you'll see here Vega is 6. What does that mean? It means if IV rushes, you make $6.08 per point. All right. Now in a butterfly, that would be a negative number. So once you really start to harness the power of the Greeks and learn them a bit more, you can position different types of trades based on the Greeks. So if you were expecting IV to rush on this one, and IV is pretty low, you do have IV crush risk. That's something to note. If you do not want to do a calendar when IV is elevated. And here the average IV is low. All right, so IV is low. If IV is up here and drops, then this whole calendar spread gets crushed and sucked into loss. All right, so one really critical requirement on calendars is that IV be low. And it is. So let's go get this one. Thanks for your comments, Peter. Right on the mark. Now, we're going to sell the IWM June 9 173 put. We're going to protect that put with a June 30 long put. All right, so the great thing about this is your max loss will be limited to $121 in this case. So you could say, well, you know, if you have a smaller account, the risk to reward, the money you make by spending 121 will dwarf the money you make on a credit spread, if you're right. So it's really a pound for pound, the risk reward, risk management capabilities of a calendar are second to none, quite honestly. So the way you manage this trade is you take it to 2 days before expiration and you take whatever profits you have. And then if the stock closes on the outside of your break-even lines, then you exit. And if you do that at the break-evens, you lose just a tiny bit, depending on when it happens. So they're beautiful. If this stock drops from here, IV will likely rise, and that'll push this whole calendar spread that way. So this break-even, if the stock drops, will also drop. Let me show you. If IV rushes in, let's just pump up IV by 25%, which might be a little high, but just to illustrate. And so what happens is the break-evens widen. So now your break-evens way the heck down here. So on the downside, no problem. If the stock drops, IV will rush. We'll get a bigger backyard. And if the stock rises, we might get a smaller backyard, but we do have super duper strong upside resistance. So these are really sexy little strategies. I need to get out more if I'm calling a calendar spread sexy, but it is. So let's go get it. Okay, what do we want to do? We want to sell the June 9 by the June 30, 173. Let's see where the stock's at first. Yeah, the stock's at 174. So why don't we go for 170? I'm going too fast. So the stock is at 173.72. So we could buy the 174. That's a little closer to the stock. So let me edit this trade here. I'm just going to change the strike to 174, repositioning the calendar up 1 point. Let's change this to 174. This will get filled. Oops. We're going to use puts. Always use puts on these things. You could use calls as well. So let's hit risk graph and let's go see what we can get this thing for. So the stock is currently right about here. So this will be more delta neutral, and the upper break even is a little higher. The upper break even is now at 180, almost 181. So that's even better. And you can slide these things anywhere you want to put them. You think the stock's going to drop? drop your calendar, position like a catcher's mitt, position the apex of the calendar where you're expecting the stock to go. I'm expecting the stock to go sideways. So I'm going to leave it centered. You can move these up and down and wherever you want to put them. So we want to sell the June 9s by the June 30s. All right, now here's how I do it. It might be a better way, but what I do is in Thinkorswim, I select calendar. Now, if you want to build this manually, of course, what you'd have to do, this would be easier in a form-based platform, quite frankly, but you could fill out a form-based platform just like you see here. In fact, let me change the strikes in the WhatsApp feed just to make sure there's no confusion. Although the 173 would be fine too, but this one's a little bit better. Let's go ahead and post this as the update. Okay. Now, you want to build it manually? You go in, you find the June 9s and you click sell 174 put. And then you go to the June 30s and click buy June 30 174 put. You can do that manually by clicking each of these. Faster though is to go give me a calendar. So display this in calendar. Don't even worry too much about the expiration dates. I mean, maybe June 9. There's June 9 there. The buy is going to be the wrong month, but that's okay. We can change it. And then I go to the 174s and then I click the buy price. All right. So we are selling the correct 174 June 9 put. All right. So that's correct. What's not correct is the expiration on the long. That's June 30. So then I change this to June 30. And there's my 126 debit. How many contracts do I want to do? Let's do 4 and keep our risk to about 480 or so, almost 484, 40, something like that. Let's hit risk graph. So now my max risk is 488. That's as close as I can get without going over 500. And so I want to do 4, change my contract sizes to 4. And it's showing 126. That's fine. Add 4 cents here if you want to see. Friday's price was 122 and now it's 129. It's moving up. So I just add 7 cents here and the calendar is still really good. There you go. Oh, I added it to the wrong side. Darn it. It's the mid price is 126. I'm just going to force it here. 126 will be the price of this calendar, somewhere in that neighborhood. And a few cents here is not going to make any difference because we're only doing 4 contracts. It doesn't matter. So don't get too upset about having to pay a little bit more than Tom's estimate. All right, now my risk graph's not painting. All right, we're going to go after 125, 4 contracts, currently 127. I'll take that. 126. Let's hit confirm and send. Send. Monitor. Got it. We got it for 125. Gerardo, can you still hear me?
Correct.
Oh, good. Tom's Tools seems to be choking a bit. We got it. We got it for 125. And that, ladies and gentlemen, is a really, really nice calendar spread. I really like it. It is about as good as they can get, I think. And if we get a little correction, Ivy comes in and our calendar will blow up and we'll make even more money with more probability. Looks like Tom's Tools is down, at least on my side. Okay, with that, we're right at the top of the hour. Let me stop sharing here. Checking chat first off before I do that. Paul's off to work. Yeah, Andrew got it. Okay, who got filled for 126? Daryl got it for 126. Excellent. Excellent, excellent. So welcome to the world of calendars. I'm compelled to do more of these if you're all interested. So let's do them. All right, we're top of the hour. We've done our hour. Any questions, comments, any support anybody requires The week looks pretty slow on the news front. Not a whole lot going on, but there's always trades. We have earnings coming up. Matt's back today, so if you're in the earnings fold, we'll be welcoming Matt back today. So he's been gone for a month or so, and it's really good to have him back. So be ready for that. And tomorrow, of course, we have Hedge Fund Live at 3 p.m. Eastern Time, and you know the schedule. So any last comments, questions, any support? All right, everybody. Have an awesome week, and we'll see you soon. Much love. Yeehaw.